Welcome to episode 2, where we talk about AMD, or the power of 3, as a framework for price delivery. In the last episode, we looked at what actually happens inside a candle. We took a simple 1-hour candle, dropped down to the 1-minute chart, and suddenly that one candle wasn't just an open, a high, a low, and a close anymore. There was an entire sequence of price movement inside it. So today I want to give you a simple framework that can help us make sense of that movement. And that's AMD: accumulation, manipulation, and distribution, also known as the power of 3. But before we even look at the chart, there's one thing I want to make very clear. AMD is not an entry model, and I don't want you to finish this video, open your chart, and start drawing 3 boxes everywhere until you find something that looks like AMD. Because trust me, you will find it everywhere. And what I want you to understand is the function behind these 3 phases. So let's look at an example. Let's start right here. What do you see? For now, forget everything you know about AMD. Just look at what price is actually doing inside this box. Price trades up, price trades down, comes back, stays within this relatively defined range. That's what we're going to call accumulation. And this stage, keep the definition really simple. Price is building or trading within a range. That's it. We don't need to predict what happens next. We don't even know yet which side of the range price is eventually going to leave. We're simply describing what price is doing. Now let's move forward. So here something changes. Price leaves the range, and if you're watching this live, what would you think right there? Would you expect price to continue? Would this look like the beginning of a breakout? Maybe, and that's important. Because price has now moved out of this range, and it may take liquidity sitting outside the range. And for someone watching this in real time, it can create the appearance that price is about to continue in that direction. But then, look what happened. So here is something that changes. Price is leaving this range aggressively, and it retraces a little bit and continues further down. So what would you have expected? Would you have price to continue? Would this look like the beginning of a breakout? Maybe, and that's important because price has now moved outside the range, and it may take liquidity sitting outside that range. And for someone watching this in real time, it can create the appearance that price is about to continue in that direction. But then look what happens. So if we scroll to the left, we see relatively equal lows here that have been taken at this point, and look what happens. We grab the liquidity and price doesn't continue. It comes back and reverses. So this is the second function, the manipulation. Now don't get too caught up in the word manipulation. For what we're doing here, I simply want you to recognize the function. The price moves outside the range before the larger expansion develops in the other direction. So now we have accumulation, manipulation, and let's continue. Now look at the difference in the way price is moving. We're no longer rotating inside that original range. We're no longer just moving slightly beyond one side. Price is expanding away from the zone. This is what we're calling the distribution. And again, let's keep this simple. Distribution is the expansion away from the range toward a larger objective. So now, if we zoom out for a second, we can now describe this entire sequence with three functions. Here, price accumulates, price manipulated, left the range, was going for an old low, picked up liquidity, and then distributed away and was going above this old high, created a new high. Now let's connect this to what we learned in episode 1. Remember our open high low close and open low high close sequences? Let's say this entire movement happened inside one larger candle. We open somewhere inside our range, price trades towards one side, it reverses and expands toward the other side before eventually closing. What would that larger candle show us? Open, low, high, close, or the other way around. So the idea from episode 1 hasn't changed. We're still looking at price delivery. The difference is that AMD now gives us a framework to describe the possible function of different parts of that delivery. And notice the word I'm using, possible, not guaranteed. We're not saying, oh, I see accumulation, therefore manipulation has to happen next. And we're definitely not saying, oh, manipulation, so now I enter because distribution has to come next. That's exactly where AMD becomes dangerous if you treat it like a pattern. We don't trade patterns. Let me remove these labels real quick. Now look at the chart again. If I already showed you the entire move, it's incredibly easy to say, oh, yeah, obviously accumulation here, manipulation here, and distribution there. Of course it is. The move already happened. But imagine we're actually standing here. You might think, oh, the manipulation goes to the upside and then we go into the downside. That's not what happened. But here was a smaller range and we had a small manipulation and a distribution. So the manipulation was also the distribution. So that is very important to understand, that within an AMD you find another AMD. That's what we call fractal. You have to remember, price is fractal. What happens on the higher time frame also happens on the lower time frame. Since price is fractal, I usually show you my time frame where I'm trading in, but I was hiding it. So what do you think, which time frame is this? This is actually the whole year of 2025. So what I showed you was not in a 1 hour, 4 hour time frame. This was the daily time frame of the whole year of 2025. And that's what I meant by you can find an AMD within an AMD. You have it in every day, every week, every hour, and even on a 15-second candle, you can find an accumulation, a manipulation, and a distribution. So AMD gives you basically an orientation to find your bias and where you're at in market structure. So let's bring this together real quick. So here we had the accumulation, price was building a range. Then we had the manipulation, price left our original range. So here we had our manipulation, and finally we had the distribution up here. So let's bring this together. AMD gives us three simple functions. Price builds a range, what we call accumulation. It leaves the range to a higher time frame, draw on liquidity. We had this one here. We took out a low, we reversed, and we expanded above an old high, which is here, and built a new high. So you can find it in every time frame. If we go to a 4-hour chart in 2024, this gets even better. You can see how this looks over the period of a year. So AMD doesn't tell you everything you need to know. It doesn't automatically give you an entry. It doesn't tell you that every range will produce the same sequence. And recognizing a perfect AMD after the move has already happened doesn't mean you could have traded it in real time. Instead, use AMD as a framework when you're looking at price. Start asking, could price be building a range here? What function might this move outside the range be serving? Are we actually seeing expansion? And most importantly, what function might this movement be serving inside the larger price delivery? But there's still one pretty big question we haven't answered. I said distribution is price expanding away from the range toward a larger objective. Okay, what objective? Where would price actually be trying to go? Because without an objective, we can find AMD everywhere. We can find fair value gaps everywhere. We can find highs and lows everywhere. But we still don't know which ones actually matter. And that's where liquidity and draw on liquidity come in. That's what we look at in episode 3. And as always, before you move on, try something. Open a chart, find what you think is a clean AMD sequence. But don't stop after you've drawn 3 boxes around it. Remove the labels again, then ask yourself, why did I call this accumulation? What actually made this manipulation? What tells me this was distribution? And then zoom out one time frame. You can start at the 5-minute, 15 minutes and zoom out to the 1 hour to 4-hour chart. Does your interpretation still make sense? Or was the AMD you found actually just one small part of something much larger? And if you have a trading buddy, show them the chart without your labels and ask them what they see. If you both call it AMD, can you actually explain why without just pointing at the 3 faces? Because being able to name something is not the same as understanding it. If your trading buddy hasn't heard of AMD, you will try to explain in your own words what AMD or power of 3 actually means.